Right. So what we are going to do as for today, I am reliably informed that it's your first time, some of you, to take financial accounting. It is possible that some of you did not take financial accounting at high school level. You didn't do financial accounting. So you don't have to panic anyway, whether you did financial accounting or you didn't, don't worry. I'll try to tailor the conversation in such a way that even someone who did not do accounting previously can be able to understand. Yeah, that I know that I'll be able to do. So here is the general scope of financial accounting. What are some of the key things that we will be talking about? I'm introducing the whole course. I'm not just introducing the lesson for today. I'm introducing the entire course. You have to pay attention. So we will define what financial accounting is. Yeah. After I've known financial accounting, we are going to introduce you to the concept of the financial statements. Now, before you come to the financial statements, I'll say what they are. Yeah, I'll say what they are. We are going to teach you how to record transactions. May people switch off their mic. I'm getting some feedback. Okay, so we'll teach you how to record the transactions in the T accounts. Yes, in the T accounts. Then after we have taught you how to record the transactions in the T accounts, you'll be taught to balance off the accounts, balancing off the accounts. So once you have known how to balance off the accounts or close the accounts, the T account, of course, you'll be trained on how to extract a trial balance. You'll be trained on how to extract a trial balance from the T accounts that you would have you would have balanced off. So the steps are: number one, record the transactions in the T accounts. How do you record the business transactions? The transactions that the business, engages itself in a day in and day out. Then after you have recorded those transactions, it's necessary for you to balance off those different accounts in which you have recorded those transactions. Then afterwards, you'll be trained on how to extract a trial balance from the T accounts that you have balanced off. Now, once we have done the trial balance, you have understood the trial balance, we will talk about the accounting errors, the different errors. So you find that as you are recording these transactions, there could be some human errors that you can make. Only God does not err, we are told. So those errors that you make, and especially when you are recording the transactions, is what we are going to study after doing the trial balance. After studying the trial balance, so we'll start by looking at the errors. Some accounting errors that affect the trial balance. Those that affect the trial balance, although the errors that stop the trial balance from balancing. The trial balance, just as the name suggests, it always has to balance. But there are some errors that if you just commit those errors, then you'll be the trial balance will not balance. Okay. So the errors that affect the trial balance, they are the ones that we are going to start with. Sorry, we'll look at them. Then we'll also look at the errors that do not affect the trial balance. There are some of the errors that you can commit, but when you look at them, they don't affect the trial balance. The trial balance is never affected by those errors. So even if the error is committed, but when you go to the trial balance still balances the credit side and the debit side. They're just equal. So it may be difficult for you to locate those errors or identify them. So what you do is that after you have learned how to identify these errors, then you'll be able to correct them anyway. You have to correct them. So after we have talked about the errors that affect the trial balance, then I'll introduce you to the concept of the financial statements then. From the trial balance, yes, from the trial balance, okay. Yeah, so from the trial balance, what is going to happen is that you're going to, what is happening? Okay, just a minute. Yes. So I'm just saying that from the trial balance, once you have learned how to come up with the trial balance, you learn how to come up with the financial statement. Now, there are basically 4 different financial statements that you are supposed to be aware of. But at this level where you are, since you are not majors of finance, we'll just introduce you to only 2 main ones. We'll talk about the profit and loss party, loss statement, or the statement of profit and loss. It is also called the statement of comprehensive income. This one helps us to know if the government, not the government, sorry, the business is making losses or it is making profits. That's what the statement of profit does. Then you have the statement of financial position, the statement of financial position. That's the one we look at, financial position, which is also called the balance sheet. All right. Sometimes you call it the balance sheet. So look at the balance sheet. That should be able to indicate to us the level of assets that we have and the level of liabilities that we have, the things that we have as a business and those things that do not belong to us. So you'll be able to balance them off. Yeah, that is in the balance sheet. After we have done financial statement, then it's okay. We can look at some of the few adjustments of financial statement, the adjusted financial statement. You can look at bank reconciliation statement, bank reconciliation statement. After you have done that, looking at the bank reconciliation statement, you can we can look at the financial statement of the trading organization. All right, the financial statements of the trading organization. Yeah, you know that organizations are different. There are those organizations that are involved in the trading, they buy and they sell. Then we have also those that manufacture. So we'll look at what are known as the manufacturing accounts. Okay, manufacturing accounts. That's why you learn how the business that manufactures goods and services, that manufactures goods, how they record their transactions, how they determine whether they have made losses or they have made profits. That is the manufacturing account. Then from there, we can look at the partnerships. You know, some businesses are partnerships. We can look at the partnerships, how they record their transactions in their accounts. We'll look at the joint ventures. Yeah, the joint ventures. Having looked at all these, then we can also have time to look at the control accounts. The control account. Then when we do all these things, once we're done doing all these, we would have tackled most of the key areas of financial accounting. So this is just the whole course of financial accounting. So in short, we are focusing on how we recording, summarizing, okay, analyzing the financial statements, okay, or the business transactions. We have to record, you have to analyze, you have to summarize them. So these are, in short, this is what we'll be talking about in financial accounting as a whole. I've talked about financial accounting from where it started from up to where it ends. So this is the route that we're going to take. Is that clear? Any question?
Yes, it is clear.
All right. If that is clear, I was just introducing what we'll be doing. Then we can now start with the first one. Let's start with the definitions, unit number 1. A lot of people have left their mics on. I'm asking that you can mute your mics so that I don't get the feedback. Okay, let's try to mute our mics. Apart from the respondent, of course. The rest of us can mute the mics. Okay. That's okay. Are you able to see the screen that I'm sharing so that I start presenting now?
Yes.
Yes, now I have started teaching. What I was doing, I was not teaching. I was just introducing you to the whole course. Let's now zero in. So the unit introduces you to financial accounting. So we will look at accounting, we will define what accounting is, we'll look at the different business entities, and then we will look at the different financial users, the people that use the financial information in this unit. In this unit now, not in the entire course, but in the unit. Let's start with accounting. So you will discover that the Zambia Institute of Chartered Accountants, Zika, in 2012, defined accounting as the process of identifying, you pay attention, number 1, it is identifying, measuring, recording, and summarizing economic information, and finally communicating it to interested parties or the users. That is what accounting is, as Zika is concerned. You know, Zika is one of the very serious regulatory boards in the field of accounting and finance. Yeah, they regulate the accountants. They are the ones that license the accountants, for example, here in Zambia. So they defined accounting as the process of identifying. After you have identified, you have to measure and you have to record, summarize. What are you summarizing? Economic information. And then you don't just end on doing this. You have to communicate it to the users, the people who are interested in that particular economic information. Is that clear?
Yes, it is clear.
Right. So we have defined what accounting is. Now, let's analyze the definition of accounting. It's very necessary for us to analyze. Number 1, you look at the definition of accounting, there is the word process, all right? We have said it is a process. Now, what do we mean by it is a process? Please, let's kindly mute our mic. Again, I have repeated. Let's mute our mics. I'm receiving a lot of feedback. Process number 1. This means that accounting has steps and procedures of doing things, okay? In accounting, you don't just wake up and do things the way how you want to do them, okay? There are basically steps that are outlined that one will need to do what? To follow. So whenever you are doing in accounting, you really need to be methodical and ensure that you follow the procedures given so that you can do what you are required of doing as an accountant. That is what process means. So I've said accounting is a process, meaning some couple of minutes or some time, element of time passes as you are trying to record the transactions. It takes some time. I've just said some time. It can be minutes, it could be a week, 1 month or something, okay, to prepare the transaction and record all those things. Okay. We have said that accounting is about identifying. Now, identifying means that accounting is only concerned with the activities or transactions relating to the business. You have to pay attention. I'm repeating this one. We have said that accounting is about identifying. Why? This is because accounting is only concerned with activities or transactions relating to the business. Accounting is not really concerned about other activities. It is just concerned about activities that concern the business. Clear?
Clear.
If that is okay, clear, then we are good to go and we can move to point number C. Another point of analysis, a special analysis of the definition, is that accounting involves measuring. Now, this means that all activities related to the business should be stated in monetary terms. Measuring simply means that all activities that relate to the business have to be stated in monetary terms. Okay. So in accounting, what we do, we ensure that time again and again, whenever we are recording all the transactions, or maybe when we are valuing all our assets, the value of those assets is expressed in monetary terms. It is expressed in monetary terms. So make sure that, for example, if a business, take for example, a business has bought cars, the business has vehicles recorded in the motor vehicles account, and the business has buildings, of course, that is recorded under land and buildings account. Okay. The business has got different assets. It has got cash. It has got people that owe it. Those are debtors, right? You have Bankongole, the people that owe you, the debtors, which are also known as the accounts receivable. So what usually happens is that you will not just record the number of people that owe you as a business. No. In accounting, we are not interested in the number of people. We're interested in the amount of money that they owe us. So you shall consolidate all the money that they owe the business and record that as account in the accounts receivable, or in the receivables account, or in the debtors account. That is what you're going to do. So in short, what we are saying, we don't measure things using other parameters or other uses. What we do whenever we are doing the measurements, we express all the measures in monetary terms. Is that clear?
Clear.
If that is clear, we are good to go. Accounting involves recording, okay? It involves recording. Now, recording is an aspect of writing down business transactions in categories and preparing financial statements. Okay, sorry. I meant that a recording is an aspect of writing down business transactions in accounting books, and this is called bookkeeping. Okay, so bookkeeping is all about writing down the business transactions in an accounting books. You have to write down those transactions. Now, whenever you're trying to write down all the transactions or activities of the business in those books, it's called bookkeeping. And again, the last area of analysis, it is summarizing. We have said accounting is all about summarizing. So summarizing means that you have to analyze all recorded information in categories and prepare financial statements. Okay, you have to analyze all recorded information. You know, you're going to be recording a lot of information, but the idea is that you will not just leave the information scattered in pieces. What you do, you'll organize the information and summarize it in such a sense so that the analysis is easy. You have analyzed all recordings or all the recorded information in categories, then you should be able to prepare the financial statements. And I did say that the financial statement involved the income statement, which is also called the statement of loss and profit. That is what I said in the introduction. Those form the financial statement. The income statement, which is the summary of trading activities to establish whether the company is making profit or loss, okay, during that particular period under concern. The other financial statement piece that we have is the balance sheet, which is basically a summary of what the business owns and what it owes as at a given time. That is what the balance sheet does. Okay. So far on the definition of what financial accounting is and an in-depth and a real depth analysis of the definition. Do we have any question from anybody? I call for questions just on the definition. Dika defined accounting as the process of identifying, measuring, recording, summarizing economic information, and finally communicating it to the users. So we have analyzed the definition. Is there any question? Okay, I am receiving a lot of unnecessary feedback. Please, can we mute our mics? Yes, some conversations that are happening in the background, we might not be interested in hearing them. Okay. Where is this one? When I mute your mic, you do not turn on your mic until you want to speak and say something. Okay, now let's look at the different types of business entities, the different types of the business entities. Now, the businesses, you find that they range from a simple one to a more complex. Okay, we have the sole traders, where the business owner is only one person. We have the partnerships and the limited liability companies. Let's start from the sole traders. So a sole trader is a business that is owned and run by a single proprietor or single person, usually an individual, but it may be a group of individuals such as a family. We have seen some organizations, some small organizations, I would call it, some small businesses where it is just the family coming together, running that particular business. The proprietor, what he does, the owner of the business, provides all the financial resources and makes the decisions. This is what happens when you are just owning the business, okay? When you're just owning the business and you are the only one, you know, you are the sole proprietor, you work alone, or maybe you work with the family. You are the only one to make the decisions, okay? Yeah, you make the decisions and you provide all the financial resources to the business. What you realize is that there may be employees in the firm and the decision making may be delegated to some of them, but the final profit or failure, which is the loss, rests with the proprietor. So sometimes you find that some small businesses which are sole proprietors, so proprietorship business, kind of business, you find that you can have some employees, of course, it's possible to have some employees. But you know that the management is just maybe one individual. So what happens is that should the company make profit, all that profit goes in the hand of the what? That employer, that owner, that proprietor. Should they make losses, all the losses, who is responsible, who is going to incur the costs, who is going to receive the losses? It is the owner of the business, the proprietor. Any question? Do we have any question on the proprietor or the sole trader or a contribution or something? Any concern? You can turn on your mic and say whatever you are saying, especially if it is answering the question that I've asked it. Is there any question?
You can just clarify again. I'm not clear, sir, on the difference between a sole trader and the...
Sorry? Come again?
I'm saying you can clarify for me. I'm not clear on that point again.
Okay, you asked that what is the difference between sole proprietor and what?
And the sole trader.
Or sole proprietor and the sole trader. Okay, no, it's just one and the same thing. A sole trader and a proprietor, like it's just one and the same thing. The way the sole means one, like, yeah, is that clear? I don't know if that helped. Okay. Do we have any questions? Yes, sir.
Yes. Yeah. What's the advantage and the disadvantage of maybe having this kind of business. So trade.
Okay, thank you very much for that that question. The question comes to the class. Class, what do you think are some of the advantages of owning such kind of a business? Let's discuss a bit.
Yeah.
Advantages of the corporate.
Yeah. Yeah, the great advantage, this is Abra talking.
What
The
advantage?
The advantage is that all the profits lies on the owner.
Thank you. All profits is enjoyed by the what?
By the owner.
Okay, thank you very much. Any other advantage? We can speak, all of us. If you want to say something, do you have an advantage?
Decision making is so easy, for it requires less paperwork.
Okay, thank you. So decision making is easy. Okay, so decision making is easy. It requires less paperwork. Or we can still make it, we can say they make quick decisions, right? Quick decisions, because you don't need to go and ask who, consult from others. That does not happen. Usually you just stand and you're the final man. There is not too much of bureaucracy like in other institutions, for example, the government institutions, where you have to wait for someone to sign, you have to take to someone again to that office, from that office you go to the next. So you find that there is a lot of a long procedure to be followed in other institutions. But when you're dealing with this one, where there is just only one person to make the final decision whenever he says he has spoken. Is that clear?
Clear.
Any other advantages?
It also helps the business owners like adapt if there's any change in the atmosphere.
Okay, yes.
And
so it helps in responding to emergencies, right? It helps to respond to emergencies. So there are those times where you really need to make a very quick decision, like you need to adapt to make all those adjustments. You can quickly make them. Anyway, you know that there are many advantages. Others you can go and research, add more. Just teach yourself, research and add more. Let's talk about the disadvantages. Any disadvantages? Are there any disadvantages?
One of the advantages is it has unlimited liabilities.
It has got limited liabilities. Is that true?
Unlimited.
Or the disadvantages. Okay, so the disadvantage is that it has got unlimited what? Unlimited the liability. You're so technical. Would you clarify what you mean to others? Would you shed more light on unlimited liabilities?
Like it has no separation of responsibilities.
Okay. All right, interesting. Thank you. So, so what is happening is that, maybe just to clarify a bit with an illustration, if you own a business as one person, then your business commits a case or something, it has got a case to answer, those legal processes. So what will happen is that if that business does not have money to pay, people will come and get your own assets, okay? There is no separation between your personal things as the owner of the business and the things of the business, okay? People can still come to your own things that you own, because there is no clear separation. Is that clear? Hello?
Clear. It's clear.
Any other disadvantage? Do we have any other disadvantage?
Losses are hit by the owners.
Sorry, would you clarify again?
I mean, every loss that the business incurs goes
Yes.
direct to the business owners.
Okay, so that's it. So you have the losses that you make. You are the one that is responsible for all those losses. What else? Any other
And
disadvantage?
the business life depends on the owners.
Yes, thank you. So yeah, so lack of continuity in case of death, right? Lack of what? Of continuity. In case the owner dies, usually you find that these businesses do what? They cease existing in case of death. Is that clear?
Clear.
Okay, let me go back to the owner of the question, the one who was asking the question. Are you fine now? Are you fine? Are you comfortable?
Yes, sir.
Okay, thank you very much. We can move on now to partnerships. So what will happen is that now, unlike in a sole proprietor, in a partnership, one or two, not really one, you can't say you are partnering alone. Two people put their resources together with a view to make profits, okay? So in law, it does not require any formal or written agreement, or a verbal arrangement is sufficient. That's for the partnership. Although there are various legal requirements which must be met, such as limitation of the number of partners. Usually we limit the number of partners to 20. Although more are permitted for certain types of partnerships. Okay, could you give us any example of such partnerships where more than 20 people are allowed? Anybody? Did you get it?
Limited partnership.
Yes, you can clarify a bit.
Yeah, there are a lot. There. Oh.
Sorry,
Like
you can come again.
partners. Oh, she's quiet.
Sorry, sir. You can proceed. What we are saying.
Oh, I can proceed. All right, thank you. I was saying, in partnership, we have active partners as well as dormant or rather sleeping partners.
Okay.
And for the active partners, are those partners with yes, yeah, on active, yes. On active partners, are those partners that takes a day-to-day or takes place in day-to-day operations of the business, or rather a firm.
Yes.
And
Okay.
those ones even gets when it's time when. Oh, all right, thank you.
All right. Okay, thank you very much. So for example, there are those professional partnerships anyways. Professional partnerships, for example, doctors come together, they are allowed to even be 200, more than 20. They come together to form a partnership, okay? Lawyers, for example, they want to make a legal firm, they can be allowed to be more than that. We're talking about professionals, people of a certain profession just come together and pool resources. Is that clear?
Clear.
Now, just like in sole traders, partnerships do not have a separate legal entity from its owners, and thus they are jointly or personally liable for the debts of the business and for meeting the obligations of contracts on behalf of the partnership. So we are saying that even just like in sole proprietorship, even in partnership, these guys do not, there is no separation, clear separation between their own things and the things that belong to the business. Okay, there is a mix up. So they can use their own resources. Yeah, in terms of the time when the business maybe has a date or something. Is that clear?
Yeah.
Yes.
Yes.
All right, limited liability companies. This is a form of a formal association of persons for business purposes. Okay, so a company is legally incorporated under company law. The limited liability companies. A company is legally incorporated under company law. So the members of a company are called the shareholders for a limited liability companies. You have the shareholders. So they become members by buying what? Shares. They become members by buying shares. So companies are usually limited, okay? Meaning that if the company goes into liquidation, right, because of debts, what it owes each member will only lose the cost of his shares or the amount contributed to the business, not more than that. So I'll repeat what we said in company. With this one, the limited liability company, what happens is that people become partners by buying shares. They buy shares, all right? For example, you guys can go buy shares if you want right now, even in ShopRite, in those public limited companies like ShopRite, Zanaco, Airtel, Zambi. We can mention them. Can you mention any of them that you know in Zambia or even outside Zambia? Give me examples of the PLCs where you can buy shares.
Trade Kings.
Maybe Trade Kings.
Are you sure you can buy shares from Trade King? It's open to the
No,
public.
it's a private one. It's a private one.
Oh, okay. Any other?
Zambia Sugar.
Yes, Zambia Sugar, you can buy shares. Any other?
Pick and Pay.
Pick and Pay, people can buy shares. I'm not sure about that one. Obvious. Any other?
Debonaires.
Debonaires. Are we sure Debonaires sell shares? Is that true? Like, are we very sure that Debonaires issue out shares to the public? I'm just
Not
asking.
really
I'm
sure,
not. Yeah,
but
I
I
can
think
see.
so.
You are just thinking. Anyway, it's interesting. It is not listed. Any other?
Maybe an
National-
insurance company.
Or what company? Like the name of a company? Yeah, you have to
Maybe,
specify.
maybe let's not Zisk, the other one.
Absa Bank.
Yes, Absa, yes, issue out shares. Any other? National Milling. Okay, so you can have Copper Belt Energy Corporation, CEC. You can have Kilanga Cement. Okay, there are just many of them. You can Bata, even the Bata guys, the Bata shoes. Pamozi, Taj Pamozi Hotel. The Pamozi guys now, they are bigger. They are even a corporation. I'm surprised. They are the big guys now. You can buy shares if you want. They listed them. Anyway, there are many companies where you can buy shares. I've already talked about that. You're clear. So these are categorized into two. There are private companies and the public. So the
What
private
does
companies.
it, sorry, when you talk
Yes.
about liquidation, what does it mean?
Okay. Any person to get that one in class? What do we mean by liquidation?
It's closure of a firm.
Yes. So just that, when you close the firm, you liquidate the company. You sell the goods, you sell the assets that you have. If you have buildings, you sell them. You have cars, you sell them. All right, that is liquidating a company. Is that clear?
Clear.
Yes.
So you will learn that the limited liability companies are categorized into the private and public. So a private company is restricted to a few known individuals, and the public is not invited to buy its shares. Okay, The shareholders cannot transfer their shares without the agreement of the other shareholders. Have you seen that now with the private, you are mentioning something like, for example, Trade Kings, of course it's huge. You know, it is not just open to the public. Not anyone can just wake up and say, I'm going to buy shares. And those people who already have shares, they cannot easily sell their shares to other people. For example, trade them on the Lusaka Securities Exchange, LUSE. You can't do that. That is for the private limited companies. Only few individuals who are known, they buy what? Shares. So the way how this one works is that I'm interested in having my same friend have shares. We can go talk to them, then they buy the what? The shares. We don't invite the entire public to come and whoever comes from wherever. And we are inviting only the people we know. Is that clear? That is for the private. Then the public companies, these are POCs, the ones that I was saying, they are usually the name of a public company ends with public limited company. So usually in abbreviation of PLC, I mentioned that the PLCs. So unlike the private limited company, the public companies can now transfer the shares without restrictions. You can buy shares, for example, today in ShopRite. What is the share price of ShopRite today? Anyone who is following? How much is one share today? Colleagues, you're not buying shares. Okay, how much is Zanaco today? Or Airtel? How much is one share? And there was silence. And it's like ShopRite is around somewhere 64 kwacha one share. 64 kwacha. Anyway, away from those. So in short, what you're trying to say is that you can easily buy shares and you can transfer them. If you buy shares, for example, today in ShopRite at 64 kwacha each, you buy whatever number you want. If you want 100, obviously you pay 60,400, you get 100 shares in ShopRite today or tomorrow. Today they have closed already. Tomorrow you can do that. Now, when you are buying shares, you buy them, for example, tomorrow. Then in the day after tomorrow, you just change mind after buying them, or by next week you want to sell those shares. You are free to sell them via LUSE. You know, you have heard of Lusaka Securities Exchange. You can just signal to LUSE and then they sell for you. You receive back your money. Okay, then someone else will get them. So that is what happened with public limited companies. Yeah, people can just come buy shares and sell them whenever they want, just like that. Is that clear?
Clear.
Sir.
The following are the people that are interested in the fight. Yes, sir.
Sorry, sir.
Proceed.
I'm behind the sir.
Yes, sir.
When you are saying that, buying shares, I'm not getting the point. I'm not getting the point. That means that when you are buying a share, you want to buy you are buying a share, the shares. That means that I don't know. You will be earning something.
Okay.
Or
okay. Okay. I've gotten the question. Anyway, that is a very huge conversation you are trying to open. Yeah, I've just scribbled on top. Really, it's a huge conversation. You have to to undergo a simple training on financial markets. Usually there's a time when you run such a training. You have to be trained a bit on how to analyze the markets, how to choose, how you make. Of course, when you're a shareholder of a company, you have to earn something. So how do they earn? How do they make profit? That's a conversation. Yeah, it's not within the scope of what I'm talking about. Yeah. If you are interested in asking such questions, obviously you can have the line. You know my line. You can contact me during maybe at my free time. I can talk about those, but not within this class, especially that part. Is that clear?
Clear.
yes, sir.
Just to help him, sir, I think in simpler terms, we can say that it's when you become parties with a certain company, like you'll be getting you'll be sharing in their profits when you buy shares. So like it's more like you just become part of this a certain company.
Exactly. Yeah, thank you. So yeah, exactly. That's what usually happens. So you'll be sharing in the profits and losses. If you get ordinary shares, of course, you'll be sharing in the profits and losses of this particular company. You'll be earning something. But I mean, in case there are some people who are interested in starting buying shares. That's what I meant. People are interested now in starting buying shares, analyzing the companies that are happening right now where they can buy shares. That's what I meant. That's another conversation, really not within the scope. Is that clear?
Yes.
Yes, sir.
Yeah.
Okay. All right. Now, who are the users of financial information? Who are those people that are interested in the information that you are recording as accountants? Number one, management. Management is interested in knowing that economic information that you record. Okay, the management need to make decisions based on how they have seen the numbers are moving, right? The owners or shareholders as well, they are interested in those figures, in those transactions to follow whether they're making profits, they're making losses, just to monitor, you know, for transparency sakes. The financial statements are usually prepared for the PLCs. They prepare the financial statements so that people can determine, the shareholders, whether they made profit or they made losses. Potential investors, those people who are potential investors, like you guys who are saying that you want to, for example, you want to start buying shares, for example. You are a potential investor, right, in that particular company. So for you to analyze or to choose a company, since there are many companies that are listed, over 20, there are many companies really that are listed on Lusaka Securities Exchange, where you can buy shares, but you can't just buy from any. You have to analyze. You're a potential investor. To analyze, you need to be able to read the financial statements, and you should be able to analyze the financial statements. That's why I was saying it's something that is real, that is so deep, or it's a broader conversation if we start analyzing the financial statements, but not within the scope of what I'm talking about today. The lenders, those people that give money, they want to know whether you have a lot of liabilities as compared to assets. The employees, the government is also interested, and the general public may be interested in knowing what you are doing in a business. Is that clear?
Clear.
Clear. Yeah.